It's on its last legs, people. That's what the price of gold and silver are telling us. And I'm going to come to John Exter's inverted pyramid to show you what happens in this crisis that we're in the middle of it. People are confused and wondering what money they can trust.
For 50 years, we lived in a monetary illusion. Debt-backed fiat pretending to be money. That system is now breaking. Gold and silver are exposing the collapse in real time. As paper currencies hyperinflate and confidence dies, value is rushing back to real assets. History is repeating, and those holding gold and silver won't be begging for rules, they'll be writing them. Thanks for watching. Subscribe to Fine Metal for more updates.
Well, silver finally made new highs. We traded up to 66.55 overnight. Yes, it's down a little bit here. It's back below 66, but it's at 65.70. It's up about $2. So silver's really doing well. I expect the bullion banks, and the bullion banks, of course, are kind of the battalion for this fiat currency army. And they're going to fight to the end to keep this fraudulent system going. So I expect a lot of slams, like paper slams of the price. But I don't think they have a chance because they've manipulated the prices of gold and silver for too long, especially silver. And now the world needs physical, not just for industrial use of silver, but also monetary use as this I owe you nothing system comes to an end. So that's how I see it. Gold traded up to 43.42. We're now at 43.20, up about 17 bucks. So silver outperforming. So that gold silver ratio, or the diff. Yeah, I learned that the professionals in the FX market call it the diff. I learned it from Peter Carling the other day. I interviewed him. And that's the other thing. Silver is traded on the foreign exchange market. Why is that? Well, because it's money, right? And it will always be money. Anyway, what else is going on? Well, we had some better than expected CPI numbers in the UK. Surprisingly, they came down a lot more than the economists thought. And I'm a little bit cynical. It was supposed to come out at 3.4%, came out at 3.2%. It's still above the Bank of England's 2% target. Back to the I owe you nothings, right? And this is an article John Exter wrote back in 1972, just after President Nixon closed the gold window on August 15th, 1971. And I said earlier that it's been a 50-year or so aberration. Some people might say, oh, it's 54 years. But they try to keep the Bretton Woods system kind of going up until 73, 74. They try to fix keep the foreign exchange rates fixed. What we have today, fiat currency forex market that fluctuates, is also really an abomination, I would say. It's like trading the exchange rate between the foot and the inch every second, or the foot and the meter, the kilo or the pound. It doesn't make sense because currencies are supposed to have a fixed value of gold and silver, of the monetary commodity, right? So the fact that it's fluctuating is a really bad thing, but that's a symptom of this system that we've had. I owe you nothings. And I'm not going to go through the whole essay, but I'm going to go through the most important part here in the beginning. So John Exter says currencies today are I owe you nothings. And by that he means all of them, not just the dollar. right? Now that the international monetary system we have so long known has broken down and the world is groping through monetary reform for a new one, it is time to consider some fundamentals. What is money anyway? Before I continue, I'd say we never got that monetary reform. The world never got back on any system. It's been very informal, and it hasn't really been a monetary system. It's been a debt-based system where, and therein lies the problem. You can never extinguish debt because you have to keep rolling over the debt. And this is why it's ending right now. It's the reversal of the aberration that we've had for about 50 years of what John Exter called "I owe you nothing's" currencies, right? And we're going to come to that in a minute. And I think what gold and silver in particular are telling us, their prices, is that he who has the gold and the silver now will write the rules. Yes, the era of fiat currency, of the fiat dollar, is coming to an end. And it might sound like a bad thing for the United States, but I actually think it's a good thing for the United States and for the rest of the world going forward, because we're going to go from a debt-based, financialized system into a more sober, real asset-based, commodity-based system. It doesn't mean that there won't be finance, but it's the analogy of the tail wagging the dog, right? Finance is the tail, the dog is the real economy, and it's gotten too much out of hand, and I think it's a great thing. And I think the BRICS, they're taking the leadership. They're taking the leadership by buying a lot of gold. They know what's coming. They're buying a lot of silver, as I keep hearing from my source, physical that is. So silver, yes, is very important industrial metal, but silver's coming back, people, as a monetary asset reserve. Who knows, might even come back in coinage form or tokenization. I hope not. But yeah, and that's why the price is going to go to levels no one really expects, except maybe our crowd here in the sound money stacking world. And now I'm going to bring you to John Exter's inverted pyramid. So it says here on Wikipedia, Exter is known for creating Exter's pyramid, also known as Exter's golden pyramid and Exter's inverted pyramid, for visualizing the organization of asset classes in terms of risk and size. In Exter's scheme, gold forms the small base of most reliable value, and I would add silver to that now as well, of course. And asset classes on progressively higher levels are more risky. Of course they are. They've all got counterparty value, risk, excuse me. The larger size of asset classes at higher levels is representative of the higher total worldwide notional value of those assets. While Exter's original pyramid placed third world debt at the top, today's derivatives hold this dubious honor. Yeah, there's an estimation that the notional value of derivatives is something north of 1,000 trillion, which is a quadrillion, and it probably is. So a lot of people expect a deflationary collapse, like of the markets, of the economy. But I kind of think what's happening, because Rafi Faber says that hyperinflation and deflation are the same thing. Everything that's denominated in gold or silver, they go down in value, and gold and silver go through the roof. It's like Weimar hyperinflation. So what I think is going to happen is that a lot of the liquidity, of course, is going to flow down through the pyramid. It's already doing so. You see where gold and silver are. But I think the central bankers and the politicians, the governments, they're going to keep pumping this I owe you nothing currencies. And they're going to become worth less and less. And even if small proportion of it flows down to gold and silver are going to explode. And basically people are going to wake up one day and realize that the currencies are dead, the fiat currencies are dead, and all the value, a lot of the wealth and reserves, monetary reserves, they're all going to be in gold and silver. And that's what's going to happen. We could still have the deflationary collapse, but right now, I think they're going to hyperinflate. Yeah, as Rafi said, it's the same thing as a deflationary collapse. One day, everything will implode, and you want to have gold, silver, and anything but the currency. You want to have hard assets, companies that are involved in hard assets, in industrial enterprises. Even technology should be okay. What you don't want to be involved in is fixed income, government bonds, corporate bonds, anything to do with insurance, investments, private equity. I think that's all going to go down the drain. So we are in for some interesting times. And actually, what we've had since 1971 or the early 70s is a complete aberration, as John Exter said. It's a non-system. So hats off to the BRICS and the Global South and the Gulf cooperation countries for making a move out of this system. And I hope here in the UK, in the West, in the US, we hope to avoid loss by holding it. Money holds its value if it is scarce and remains scarce. Scarcity is the keystone of store of value money. Today, no money in the world fully performs all three services. National currencies are being used as means of payment and standard of value money, but none in this inflationary age is an assured store of value money. In fact, the foremost concern to voters and politicians everywhere is that so many currencies are so rapidly losing their value in terms of commodities and services. Commodities like gold and silver, which are being used as store value money, are not being used as either means of payment or standard of value money. Well, they're coming back as means of payment, especially among sovereign nations, and that's what the Chinese, the Russians, the Gulf cooperation countries, India now with silver, that's what they're doing. They're going outside the dollar system because they know the dollar's toast. We do something and go back to a more sane system as well, instead of worrying about a useless war, really, that we're waging against the Russians in Ukraine. I think that's a total waste of time and something that's not needed. Our leaders, of course, they're not leaders, unfortunately. So you're going to have to do it on your own here in the UK, in the US.